let's look at the US dollar versus the Singaporean dollar. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Let's go here to Forex and we look at the performance from the 52-week low. So 1.46%. So basically pretty close here to the lows. And we have fallen minus 6.5-ish% here from the 52-week highs. If we go here and look at the charts, this is the giga picture. USD/SGD is the pair. So we can see that there are these gray monster cycles. That's rather interesting. But if you do look at the gray monster cycle, if it continues to develop, then there's reason to expect deterioration of the dollar. This whole thing about the strength of the dollar versus other currencies it's all about relative performance. And the big thing happening now is the enormous amounts of very lax monetary and fiscal policies. The tricky thing about the US dollar is that no one, very few really know how many dollars are out there. You have the euro-dollar market, and basically you have this kind of shadow dollar system out there. So it's sort of it's a bit of a messy, murky situation. And that is one of the reasons why you will find very good arguments for the weakening of the dollar, but also arguments for the opposite. Anyway, what I found particularly interesting here are these smaller time cycles. So rise, decline, rise, decline. You see the pattern, and here you see the low of the time cycle basically nails the low here. The low nails the low here. The low nails here. Almost nailed the low. Pretty darn close. And based on these time cycles, these small ones that have been pretty good here at projecting price developments ever since the 90s. Okay, so these time cycles are a really big deal. For some reason, they work. Based on these time cycles, they suggest that around here, early 2021 was the cycle low of the dollar, meaning that we expect a rising phase here. If you look at some of the prior time cycles, so here we do have this clear rising phase, but here we're having like a double peak pattern. In this instance, we peak towards the late part of the cycle. In this instance, you have multiple peaking patterns. In this instance, you peak a bit early, but something that I think you see in price action is that when we look at all of these, there's an interesting pattern that keeps repeating. That is that we seem to have these rises, and then we tend to have a pullback, and so you have this M pattern. For some reason, you see here as well, you have a bit of an M pattern here. Let's paint it in. So here you have this M pattern. I mean, very clearly. So there's something going on here. So based on the history of the M pattern, if we are going to have something like this, then we would expect an initial rising, a strengthening of the US dollar, then likely a pullback towards the middle of the time cycle, and then a rise towards the beginning, right before the declining phase accelerates. When we compare the time cycle with the seasonality, then we see something interesting. So April is literally the weakest month for the dollar in this pair. And that's something, I mean, we did see that April So here we see April here, and it was a period of deterioration. But May is literally the strongest month, both in terms of the times it closes higher than it opens, and also, in terms of performance, 0.6 is the highest average performance. So May is strong. And you could more broadly say that, generally speaking, this period here from May to August, September-ish is characteristically strong for the dollar. So if we look here at the period from May to August, September, so here we have May, here we're approaching August, September, so around here, and that is something that fits with what we have seen with the previous spikes during the many previous time cycles. So that is very, very, very interesting to see this situation where the seasonality corroborates what is projected with the time cycles. Here we have the daily data point. Here we have the daily data points. The red 200-day moving average has been key in the past. You see here in blue, it has functioned as a support level. In this instance, you see that the bulls start to get squirmy as we approach that resistance level. That moving average is moving downwards. Hence, it's only a matter of time until we get interaction between price and the moving average again. What is interesting is that we do have, from a more bullish perspective, is that you have this green 50-day moving average. It is pointing upwards. Hence, we will, technically speaking, have a golden cross. It will be a different kind of golden cross in the sense that it happens based on just how, gravity sort of works. It's very different from when you have a golden cross, when the 200-day moving average is moving sideways or upwards. The same thing is that when you do have price breaking out above the 200-day moving average, when it happens when the 200-day is moving, sharply downward, then it happens just, due to gravity. But anyway, given what we have seen with the time cycles and the seasonality, even though these bullish signals, golden cross and breakout above resistance, it sort of happens in a kind of a bit of a fake way. It will be interpreted as bullish, and there's many computer algorithms that will just get a buy signal. So it actually is likely to help the bulls. Okay, so we didn't really have time to look at the difference between these two countries. Singapore is a very, very, very advanced country. And in many ways, it is more advanced than United States. Looking very long term, we did have this gargantuan time cycle in the beginning that suggests that we could see some far more longer term weakening of the US dollar. And that is something that also makes sense given that Singapore is a very advanced country. Not simply just technologically, but the political system in Singapore is very sophisticated and mature. I think that at this point, looking at the coming months, I think that due to the cycles, the support levels, and the seasonality, I think there's more reasons to be bullish on the US dollar temporarily than to be bearish.